PIN's distribution rate improved from 12% at the year end to 15% during the 6-month period we're reporting on. And PIN has remained cash generative as well. Over the last 10 years, it's produced a total of £1.5 billion of net cash. So we have agreed a clear strategic plan with the board, and with all these actions underway, we're confident that PIN is well positioned to deliver improved NAV progression over the medium term.
Hello, you're watching Proactive. I'm joined by Charlotte Morris, partner at Pantheon and lead manager of Pantheon International PLC. Charlotte, very good to speak with you. You're up to your interim report today. How was your performance during the half year?
Yeah, it's great to be here. Thanks for having me. Well, during the 6 months to the 30th of November 2025, PIN's net asset value, or NAV, increased by 4.9%. That growth was driven by modest underlying valuation gains and investment income and favourable currency movements, as the majority of PIN's portfolio is US dollar denominated and we don't hedge currency. Pleasingly, the share price increased by 26.7% during that 6 months period to the end of November, outperforming the MSCI World and the FTSE All-Share indices over that same period. So the discount on the shares narrowed from 40% at the end of May last year to 28% at the end of November, but we still believe that is too wide in our view. PIN has continued to buy back its own shares in order to capture value for shareholders. And during this period, PIN invested £42.8 million in share buybacks, and those contributed 1% to the NAV growth that I just mentioned. Generating NAV outperformance has been more challenging in recent years, especially given the exceptionally strong performance of the public markets. But nevertheless, we are focused on delivering the attractive returns that our shareholders expect from a private equity portfolio. And we've agreed a number of initiatives with the board that are designed to improve long-term NAV performance.
Charlotte, can you explain what those initiatives are?
Sure. Well, the first thing is that we have materially enhanced our analytical capabilities to give more insights into PIN's diversified portfolio. And that greater transparency is helpful for the board in their strategic decision making. But we also believe it's more detailed information like this that is helpful for investors and analysts and will help them develop a greater understanding of the different elements that impact the underlying performance. We've also refined our investment strategy, and as part of this, we've refined our private equity manager buy list to concentrate capital with those demonstrating first and second quartile performance. Of course, we also continue to back sector specialists, we've talked about that before, with proven buy and build capability and repeatable operational value. Our objective is to improve returns through cycles. So we'll deploy capital more consistently than perhaps was previously the case, and we'll become more active sellers of assets in the private equity secondaries market. And that has experienced record growth in recent years. So all of those things we think will allow us to reshape the portfolio in line with PIN's investment strategy.
I mean, it sounds like it's been a busy period, Charlotte. Anything else you'd like to highlight?
Well, we've talked about this before, but we are proactively allocating capital, trying to strike the balance between share buybacks when the discount is wide and also investing in new private equity deals. Of course, we have to manage our balance sheet efficiently to support all of those activities, but we believe our net debt position of 9.3% at the end of the period is prudent. And finally, since the period end, the board announced that it had agreed a reduction in the management fee that PIN pays to us, Pantheon, as manager, and that will be more simplified, and that comes into effect from the 1st of June, the new financial year.
Looking ahead, what are your priorities and outlook for the coming months?
Well, we enter 2026 with a constructive outlook, and we are seeing the momentum of private equity deal flow starting to build. We're starting to see the early signs of this slow market recovery come through to PIN's portfolio as well. While it was still below the long-term average, PIN's distribution rate improved from 12% at the year end to 15% during the 6-month period we're reporting on. And PIN has remained cash generative as well. Over the last 10 years, it's produced a total of £1.5 billion of net cash. So we have agreed a clear strategic plan with the board, and with all these actions underway, we're confident that PIN is well positioned to deliver improved NAV progression over the medium term, as our shareholders expect.
Charlotte, thank you very much for the update. Very good speaking with you today.
Thank you.
Charlotte Morris, partner at Pantheon and lead manager of Pantheon International PLC.